Did you know some economies are set to grow even faster than China this year? Stick around to find out which one takes the top spot and why it could be your next big opportunity. Welcome to Global Finance 360. Today we'll review the 10 countries whose economies are projected to outpace China in 2025. I'll share their growth rates, the key driving sectors, and the pros and cons of investing or working in each of these markets. If you enjoy this kind of analysis, please like, subscribe, and hit the bell so you never miss a Global Finance 360 ranking. Our video is divided into 3 parts. First, a countdown from number 10 to number 1 with concrete data and real examples. Next, a deeper look at the common factors behind these rapid expansions. And finally, a real-world success story you can apply to your own projects before we wrap up. Let's begin. In 10th place is the United Arab Emirates, with an estimated growth of 3.5% in 2025. Here the engine is luxury tourism, advanced logistics, and a determined push to diversify beyond oil. Advantage: world-class infrastructure and free zones that attract foreign investment. Disadvantage: heavy reliance on crude and exposure to volatile oil prices. 9th is Ghana, at 4% growth. Its economy expands thanks to modernizing agriculture and exploiting mineral resources like gold and offshore oil. Advantage: a young population and competitive labor costs. Disadvantage: energy and transport infrastructure still need improvement. 8th comes the Philippines, projecting 4.2% growth. Its main drivers are business process outsourcing and remittances from millions of Filipinos abroad. Advantage: a well-established BPO ecosystem and widespread English proficiency. Disadvantage: high exposure to climate risks such as typhoons. 7th is Bangladesh, at 4.5% growth. The textile industry and low-cost manufacturing power its economy, backed by reforms that improve the business climate. Advantage: very competitive wages and growing access to international markets. Disadvantage: pressure on water and sanitation resources and challenges in labor conditions. In 6th position is India, with 6% expansion. Technology services, booming domestic consumption, and a dynamic startup scene stand out. Advantage: a massive internal market and an abundant tech talent pool. Disadvantage: marked regional disparities and tensions in the agricultural sector. 5th place goes to Rwanda, with 6.5% projected growth. IT investments and legislative reforms to attract foreign capital drive this surge. Advantage: political stability and long-term development plans. Disadvantage: a still small domestic market. 4th is Ethiopia, with 7% growth. Major infrastructure projects, roads, railways, and irrigation systems are the catalysts. Advantage: ambitious public works that boost productivity. Disadvantage: social and political tensions that create uncertainty. The bronze medal goes to Benin, at 7.5% growth. Regional trade and the development of new renewable energy sources lead the way. Advantage: a strategic West African location close to large markets. Disadvantage: a financial system that is still under development. 2nd place is Djibouti, with 8% expansion. Its port services and logistics hub connect Africa and Asia. Advantage: a world-class port and significant infrastructure investment. Disadvantage: dependence on a single sector and limited natural resources. And in 1st place is Ireland, with an anticipated 8.5% growth in 2025. High-value pharmaceutical and tech industries, along with a very attractive tax regime, propel its economy. Advantage: a competitive fiscal environment for multinationals and a highly skilled workforce. Disadvantage: vulnerability to changes in EU regulation and global tech demand. Now, before we look at our real-world case, let's dive into an extra segment on future trends. First, consider demographics. Most of these countries have young populations or only moderate aging, which determines labor supply and domestic consumption. For example, Rwanda and Bangladesh both have over 60% of their population under 30, guaranteeing dynamic job markets for the next 15 years. Second, evaluate digitalization. Countries like India and the Philippines are investing heavily in broadband infrastructure and digital skills training. This not only boosts their tech sectors, but creates multiplier effects in fintech, edtech, and e-commerce. Third, factor in sustainability. Ethiopia and Benin are developing solar and wind energy projects that reduce long-term production costs and attract international green funds. Growth based on clean energy tends to be more stable and less volatile than fossil fuel-dependent growth. Fourth, look at regional integration. Ghana, Djibouti, and Rwanda are deepening trade agreements with neighboring blocs, facilitating free movement of goods and services. These pacts usually lead to logistical improvements and greater manufacturing investment. Finally, analyze regulatory innovation. The United Arab Emirates and Ireland have advanced legal frameworks for next-generation industries, blockchain, biotech, AI, offering sandboxes and special licenses that accelerate startup growth and draw global talent. With this extended perspective, you not only know where growth is fastest, but also why and how these trends might continue or shift in the medium term. Now, before we close, let's look at a brief comparison with China. China's growth for 2025 is projected at around 4.5%. Solid, but below half of our top 3 performers and trailing most of our list. That gap highlights significant opportunities for investors and professionals to pivot toward these faster-growing markets. Let's now see a real-world success that shows these conditions in action. In 2018, Inflazome began developing inflammation modulators using artificial intelligence. Thanks to Ireland's R&D tax credits and European grants, it raised over 20 million euros in private funding. Just 2 years later, in 2020, it was acquired by Roche for about $380 million, creating more than 40 high-skilled jobs in Dublin and solidifying Ireland's reputation as a global biotech hub. This case teaches 3 practical lessons. Identify and leverage R&D tax incentives in each country. Partner with universities and local research centers. Attract foreign investment by presenting high-impact, scalable projects. With this, you not only have the complete ranking, but also a roadmap to replicate success in your own sector or company. Which of these markets surprised you the most? Where do you see the greatest opportunity for your business or career? I'll read your thoughts in the comments. If you enjoyed this analysis, please like, subscribe to Global Finance 360, and share this video with someone exploring their next big market. See you in the next ranking.